Decode, demystify, learn. DQ Learning. Only on Bloomberg Quint.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Minda Shah. You're watching Indian Open. Let's go straight to the headlines at this hour. Asian markets falter after Donald Trump says he doesn't expect much from his upcoming meet with North Korean leader Kim Jong-un. The worst may be over for the country's largest sector lender, say brokerages, after SBI makes a provisioning of nearly 29,000 crore rupees in the fourth quarter. Rising crude prices take a toll on HPCL's earnings. Gross refining margins in the fourth quarter hit a one-year low. New launches and sustained commercial vehicle demand is expected to aid Tata Motors in the fourth quarter performance. JLR's performance may weigh in on the numbers. And let's see if it indeed shows up for what is arguably one of the cheapest auto names over the last many years, maybe. But any case, good morning all. And the markets look like they'll start off on a flattish note, taking over from where the US markets left off, which was down about 0.25% to 0.75%. So all over the place, the US markets really, and the Asian markets are taking cues from that. All the Asian markets which are starting off on a negative note. The SGX Nifty pointing towards some bit of a downtick, and maybe there's a chance that the downtick might get exaggerated during the course of the day, because there's virtually no support from the from the global markets, and also because we did reasonably well yesterday. There was some respite in trade both for the Nifty, the Sensex, and the mid cap and the small caps as well. So the trade was fairly decent in trade yesterday. We halted a 5-day losing streak as well, ending about 20 odd points higher for the Nifty and about 65 odd points for the Sensex. The market breadth improved too. Small caps led the day. Remember, the BSE small cap index was up almost 0.75%. At a point of time, the mid cap index was showing gains of about 1% as well. So small caps led the way, and the market breadth was fairly impressive. If you just look at the RSI indicators and the 50, 100-day, 200-day moving averages for the small cap index, both the mid caps and the small caps dipped below the 50-day moving average as well. The question mark only is that if they stay below this key moving average for 4-5 days, then you would believe that there is a confirmed downtrend in place. If indeed the uptick that we saw yesterday continues and we move back above, then that might actually be seen as a good sign. The flows, however, continue to be negative, courtesy some block deals as well, and otherwise FI sold big in trade yesterday, about 1,600 crores worth of selling that happened from the FI side. Usually the DI buying is much higher than the FI selling. In yesterday's case wasn't to be the case. And frankly, I'm sure we'll talk about it in the F&O perspective too. But if you just looked at the futures and options activity, a large portion of activity was on the futures side. The F&O turnover was high. Everything was on the futures side. Options didn't see too much of activity in trade yesterday. Let's wait and watch. We'll talk about that a bit later on. But the selling from the FIs continues. So in light of that, before we get to what stocks should watch out for today, keep in mind, today, from a mid-cap end perspective too, a very busy day of earnings. We've seen what's happened in trade yesterday when bad numbers come out. Symphony was a case in point, or some of the others, and that keeps the space active. In today's session too, watch out for a lot of these names. Apollo Pipes, big institutional presence there, so important stock to monitor. CESC, a lot to be watched out for earnings, as well as what they have to say on the demerger timelines. So watch out for them. I think Indraprastha Gas, in light of what's happening to MGL and IGL both, Jet Airways, the stock has halved YTD. Kolte Patil from the real estate space would be active as well. So interesting sets of numbers. KPIT and large L&T Infotech will keep the IT space abuzz. And yesterday was a big day for auto component numbers. Bharat Forge dipped quite a bit. All eyes will be out on Motherson Sumi today as to what is it that it has to do. So a lot of results to watch out for in the session today, and that should keep the broader end of the market fairly excited and active. But stocks that could react at 9 a.m. and 9:15 a.m. today on the back of their numbers. Bata India, the margin improvement was telling out there, 13% versus 9.7%. That's the key. Let's wait and watch if there is an impact on Bata India in the session today. I was talking about auto components, and the juggernaut rolls on for Minda Industries. Revenues were up 53%. Again, I thought the standout performance was that on that base, they managed to make margins move up to 12.4% versus 11.7%. That's the key. The comparable numbers on the margins were fairly impressive. Let's wait and watch if Minda continues to react or no. And this one, MBL, well, revenues up 13%, but the net profit up 3.55 times. And again, the margin comparison, we don't have it on the screen, but margins at 35.5% versus 26%. Big bump up in operating profit margins, and that is what could keep the stock excited in the session today. All three numbers which seemingly have come out with good numbers. The operational performance has been very, very solid. Lastly, watch out for Gravita India too. They've entered into a contract with Amara Raja Batteries to supply pure lead and alloys. The stock has been a reasonably good performer, and it keeps on piling on new clients. Let's see if there's some reaction on this one as well. But it's all about earnings on First Word as well. We start off with SBI management and the 2-year roadmap to recovery, and brokerages are optimistic about the plan. Vishwanath Nair and Shraddha Babla tell us all about it. Cipla's limited exposure to the US failed to insulate the drug maker's bottom line. Darshan will tell us why. Higher crude prices took a toll on IOC and HPCL earnings, just as expected, but Yatin dissects the numbers and tells us just how much the refining margins suffered and what's the way ahead. And lastly, we saw what happened with Symphony yesterday, but that was not all. Voltas, Blue Star, Lloyds, all of them have suffered. We talk about how thunderstorms have hurt the cooling solution makers' seasonally strong quarter and question the valuations that some of these companies enjoy. One can't not start off with SBI. The numbers came out during market hours yesterday, and they reported a loss for the second consecutive quarter. SBI's loss stood at 7,718 crores as provisions for bad loans surge. The loss figure is also the second largest quarterly loss reported in the Indian banking history, with PNB footing a larger amount. But brokerages don't seem to be too worried. Shraddha is standing by to tell us why. Good morning, Shraddha.
Good morning, Neeraj. So largely we are just seeing minor target price changes coming in for SBI with no change as far as the rating or the stance of brokerages is concerned, and that's probably because analysts believe that the asset quality damage wasn't as bad as compared to peers, and most of the slippages to 75 to 80% came from within the known stress pool. So you have just a target price change of about 15% from Credit Suisse. That's the biggest change that I have come across as far as brokerages are concerned. So they seem the most bearish. While they have maintained their outperform, they've cut the target price from 381 to 322 on account of higher provisions, while they do say that the gross NPAs have likely peaked out at 10.9% in this quarter, with a low bad loan cover of about 50%. Credit costs they expect will normalize only by FY20. They've also said that while the residual stress is contracting, the bank will require additional capital to support loan growth in the future. You have Bank of America Merrill Lynch, which has maintained a buy and their target price as well at 380. That's because they believe that the recognition cycle is now behind for the bank, and that recovery and loan growth will drive a sharp rebound in earnings over the next few years. They've said that SBI, they believe, is the key beneficiary of that asset quality and loan growth cycle. You have Motilal Oswal, which is maintained a buy but raised the target price just marginally by 3 rupees to 365. They have said that the asset quality damage was controlled with gross NPLs rising by just about 12% sequentially. They do say that the credit cycle is coming to an end and earnings will gain traction over FY19 and FY20, and they have raised their earnings estimates for FY19 and FY20 by 36% and 12% respectively. A similar view coming from Prabhudas Lilladher. They've maintained a buy, but they've raised their target price again marginally by about 7 rupees to 349 rupees. They've said that while the bank's stressed asset pool is now lower at 1.3%, but there is still some marginal recognition which is left to be done. But they do say that resolutions will drive asset quality and earnings. So a lot of optimism, Neeraj, as far as the outlook for FY19, FY20 is concerned, and that's probably driving their views.
Yeah, and thanks, Shraddha, for that. SBI's management also painted a rosy picture with the chairman laying out a roadmap till 2020. Vishwanath Nair is here with SBI's game plan.
While announcing the 7,700 crore loss for the January-March quarter for State Bank of India, its chairman Rajesh Kumar didn't miss a beat before saying that the worst was behind them. Now, this is not something that Rajesh Kumar has said for the first time. In fact, this has been repeated many times in the past, but it hasn't truly reflected how the bank's balance sheet has performed. But this time around, Rajesh Kumar believes that they have a 2-year roadmap which can help them turn around the bank and achieve certain goals that the management has set for State Bank of India. Let's try and understand what this 2-year roadmap looks like. They want the credit growth, which is currently at about nearly 5% at the end of March 2018, to grow to over 12% by March 2020. According to State Bank of India, there is plenty of economic activity happening at this point in time, especially in the cement and the steel sector. There is also a lot of market share available because certain public sector banks have been faced with lending restrictions by the Reserve Bank of India. So there will be those opportunities for SBI to grow further. Alongside growing its loan book, SBI will also reduce its dependence on the high-cost corporate deposits so that its net interest margin can increase from about 2.67% to 3% within these 2 years. While doing these things, the State Bank will also try and cut down its credit costs and bring its return on assets from about -0.19 to nearly 1%. That is what State Bank aims to do in the next 2 years. Let's look at the asset quality picture, because that is where there is a lot of weakness within State Bank of India. Its gross NPA ratio at this point in time stands at about 10.91%. What State Bank aims to do is to bring it down to below 6% by March 2020. That will be closer to where SBI was before the Reserve Bank of India initiated the AQR, or the Asset Quality Review, back in October 2015. Before that happened, its gross NPA ratio was closer to 4.5. So this 6% or less than 6% will be actually closer to that. Alongside, the net NPA ratio will also be brought down to nearly 2.3%. While this is all happening, the slippage ratio, which is the ratio of accounts that move from standard to NPA category every quarter, that will be brought down to less than 1.3% within the next 2 years. That is what SBI aims. Now, while doing all of this, SBI is also trying to reorganize its businesses, ensure that stressed asset management is moved to a specialized group with specialized professionals handling it, while the rest of the bank can focus on growing the loan book and growing business relationships with corporates, large as well as mid-size. SBI is also trying to merge the project appraisal scheme, project appraisal system that is within SBI Capital Markets as a separate business. They're trying to merge that with the bank so that the bank can better monitor and better lend to corporates in India, whilst SBI Caps can continue as a pure play investment banking arm for the bank.
Thanks for that, Vishy. Well, the stock did reasonably well yesterday. Let's see what is in store today. And let's also see what's in store for Cipla, because its limited exposure to the US hasn't provided enough insulation to the pharma major. It failed to meet estimates in the fourth quarter, as well as one-off expenses hurt the company's bottom line. Darshan is here to analyze the numbers and tell us about what's went wrong with the pharma major this time around. Darshan.
So I think one of them, but there were a lot of one-offs, but even if you take that off, the numbers have been rather weak for Cipla this time around. Top line, we were anticipating close to over 4,000 crores of top line. They've delivered 36,898, I think 3,700 crores. It's a miss of 300 crores on the top line. Profit versus an estimate of 438 crores. It's come in at 178 crores. No doubt there were one-offs, and I'll tell you about them. But operationally also rather weak. Margins coming in at almost 15% versus the estimate of 21%. So that is something that was weak. Basically, even on the top line, it was the higher other income and higher other operating income that helped Cipla. But a lot of one-offs. There was this one-off 78 crores because of some provision for the NPPA. Higher other expenses this time around that boosted, that impacted the margins this time around. A subsidiary was closed in Yemen because they had a one-time loss of 51 crores. And they had a one-time gain of $11 million on the sale of some plant. That was that part of the other operating income. But nevertheless, geographically, India did reasonably okay, 13% growth. North America was up 4%. South Africa, because of the currency movement, was up 23%. But the other markets, emerging markets, Europe, API, all of them failed to deliver. The con call highlights pretty much standard what they say all the time, nothing exceptional. They gave a slightly bullish guidance in terms of they expect US, South Africa and India to lead growth for them. India, they're seeing a growth of almost 14% in the next year, similar to what they saw. R&D spends will be slightly subdued this time around. Similar was the case with US, expect one limited competition product every year. So the management commentary was pretty standard, not a clear guidance, not very optimistic as such, but nevertheless I think Cipla has managed to disappoint this time around and probably could react negatively to the numbers.
Darshan, you spoke about one-offs. The other expenses which were higher, they are not necessarily one-offs, right? They could get repeated.
No, they could get. They have said that the management said that they believe it's a one-off.
Okay.
But we've seen this time and again that that some things like this do come about, but not at all happy with the numbers that Cipla has posted.
Okay, last question. What have brokerages said? One of Cipla, two of the Dr. Reddy's that came out as well. Any indications, early indications?
Yeah, so early indication, most of them have indicated that it's a so I think the story is same. Most of the analysts have cut the EPS and target price on Cipla, also saying that the outlook is good, the management is good. So I think it's the same story. So I think they're trying to hedge themselves on both sides.
Okay.
That is what the case that was. Dr. Reddy's was rather disappointing. Most of them have, I haven't seen too many reports, but most of them have not cut the target price. They've said it's a weak quarter because already it's trading at near lows only. So I don't think anyone's cut target price majorly on Dr. Reddy's.
Okay, so that's Cipla and Dr. Reddy's as well, which came out with numbers during market hours yesterday. And well, let's see, anybody's guess. That one, I mean, forget 12 months, but I think in yesterday's session had a 6% uptick as well, but no big cuts. The stock is anyways corrected quite a bit. Darshan, thanks for putting that into perspective. So that's as far as the pharma majors go, the ones which came out with numbers yesterday. And then the ones which came out with numbers yesterday from the oil and gas space, the OMCs. And higher crude prices were expected to hurt the fuel retailers in the fourth quarter. And that's exactly how it shaped up as well. For both HPCL and IOC, both companies saw their gross refining margins decline in the last quarter. Yatin is here to take us through the numbers. And Yatin, let's start off with HPCL, which came out with numbers after market hours.
Neeraj, good morning. If you look at HPCL, the sequential performance was also kind of muted. Now, if you look at the revenues, they were up, close to 6%, top line coming in over 60,000 crores, in line with the street expectations. Profits, however, were down by nearly 10% to come in at 1,750 crores, more or less in line with the street expectations. But what surprised negatively was the GRMs. The GRMs for FY18 stood at a level of $7.4 per barrel. Of course, there was an improvement on a year-on-year basis, but if you look at the fourth quarter GRMs, they stood at $6.6 per barrel versus $8.5 per barrel, and this was also largely to do with the fact that we had inventory gains coming in for oil marketing companies this time. In fact, CLSA maintains a sell on HPCL. The target price given by CLSA is 300 rupees a piece. They say that the core EBITDA and the PAT have been above estimates, but EBIT has been a miss. Poor core first quarter and macro risk in the election-heavy FY19 to keep buyers away. The theme here, what brokerages are talking about oil marketing companies, is that, of course, the results have been more or less in line with the street expectations, but here on fuel hikes and enjoying a hefty margin on the sale of gasoline as well as diesel will not be possible because of various political issues which are surrounding the country, and because of that macro uncertainty, we could see oil marketing companies under pressure. Also, we had IOC coming out with earnings. Of course, the earnings came in during market hours. The revenues were up 6% sequentially. However, profits were down 34% on a standalone basis. However, we had strong GRMs coming in. The fourth quarter GRM stood at $9.1 per barrel for IOC versus a level of $8.1 per barrel. So this time IOC had posted better GRMs on an overall basis, but more or less everything was due to the heavy inventory gain that we saw for oil marketing companies. But clearly the political uncertainty, how the fuel prices will be passed on to consumers since crude is on the boil, that is the question really the market is asking, and probably that is the reason why oil marketing companies are not really reacting to, earnings which are in line with street expectations.
Cool. Okay, Yatin, thanks for putting that into perspective as well. All over the place, you would have to say, and if some decisions come about, I don't, from the government on the fuel retail price side, let's see if it impacts these. Though, from the conversations that are going on the grapevine, it will not have a direct bearing on what the OMC earnings will be, maybe the excise duty cut or etc. All of that should augur well. However, let's see, the number is not up to the mark. And the numbers not up to the mark for the cooling solution companies as well. The thunderstorms in the north may have spoiled the party for almost all the air cooler manufacturers. The reason I bring this up today is over the last 12 hours, a lot of question marks about the kind of valuations that these companies enjoy. Now, let me put that into perspective. I start off with Symphony. The sales were down 28%. And the PAT was down 36% in what is arguably one of the strongest quarters seasonally. Voltas, revenues were flat, PAT was down about 3.5%. Blue Star bucked the trend a little bit. Revenues were up about 6% though. PAT was up 37%. For all of the companies, remember the margin picture stayed reasonably okay. So they did well on the operational front, but the revenue front, the top line front is a problem. I read a report which also spoke about Lloyd's, and the cooling solutions business of Lloyd's as well was flat for Q4. So for all the cooling solution majors and the larger ones, there hasn't been a very great Q4. Now look at what some of these companies have done all through the last few years as well. And if you just look at the revenue trajectory for a bunch of these, this is Voltas, the revenue trend. This is quarterly revenue trends. But as you can see, the tallest bars are the Q4 bars, which are essentially what they do in Q4, which is the quarter gone by, which is arguably the strongest quarter. Somehow, over the last 4 years, there has not been a uniform increase, as this chart will anyways suggest. In the case of Symphony as well, while they like to talk about a 25% CAGR growth year on year, somehow if you look at it, the revenue trend, this is only for Q4 and not for all the quarters, only Q4. As you can see, the revenue trend is not really consistently higher. So quite unlike what happens in staples, that is not the case in these companies. Now Symphony had to say this. They admitted as much in the con call that unfavorable weather conditions resulted in lower volume growth in Q4 FY18, and the impact of bad weather and thunderstorms is continuing in the current quarter as well, which is Q1, which means that you could probably see some problems for Symphony in Q1 as well. And then you look at the valuations. Symphony trades on reported earnings of 192 crores after the fall yesterday at 52 times. Blue Star 46 times. Voltas 32 times. And therefore the question mark that comes about is not whether these companies will deliver growth or no. Yes, they will. But whether they are priced to perfection or beyond perfection, and whether consumer durable companies, cooling solutions or otherwise, but can consumer durables be given the kind of valuations that staples enjoy? HUL at 55 times or 60 times, everybody says it's expensive, but it consistently clocks in growth. Are consumer durables being able to do that? There is a significant difference in cyclicality, predictability as we've seen, consistency of growth as the charts show, and profitability as well, as Q4 numbers for all the marquee companies are showing. So the question mark only will be over the course of the next few weeks, months, is whether the P multiples and the high P multiples that some of these companies enjoy, do they deserve a correction or no? The answer to a lot of people's mind is yes. Let's see what the market has in mind. But Symphony and Voltas showed the chinks in the armor as to what unpredictable weather could do, and could do meaningfully to their top lines and arguably to the bottom lines as well. That may not augur well for the multiples. Symphony was down about 11% yesterday. May not be all over because the valuations are very, very steep. Well, let's wait and watch. That's all that we have on First Word for the day today. But remember, later on in the show, we get in Nilesh Shah of Kotak Mahindra AMC to talk about all of these and more. A bunch of on earnings, the macro concerns. He'll join in to put all of that into perspective. We'll decode the Q4 earnings of Care Ratings with Rajesh Mokashi. He's the MD and CEO. Let's try and figure out if more debt issuances would help a company like Care Rating and some of the others and their peers. And Sudhir Jain of Minda Industries. The juggernaut rolls on. The management joins in to talk about how the quarters ahead could look like after a fabulous show that they've put out in Q4 and arguably FY18. All of that a bit later on in the show. For now, we take a break. Full tilt towards the day's trade on this other side.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors, funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Emerge, साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Hi guys, we're completing 1 year of the mutual fund show on Bloomberg Quint. Take a look at all that we've done over the last 12 months.
Optically, nothing is cheap. Volatility is integral part of financial markets.
Prices change every microsecond and NAVs change every day.
I have been always suggesting that if you can be Kumbh Karna, invest today and go to sleep for next 14 years.
Join us on the next leg of our journey as we attempt to make the conversations even more meaningful on your favorite show, The Mutual Fund Show.
The Mutual Fund Show Anniversary Special, Wednesday 4 p.m. only on Bloomberg Quint.
Welcome back. You're watching Indian Open right here on Bloomberg Quint. Let's see how the Asian markets are faring at this point. Not too well, I'm afraid. We've seen ticks and down ticks rather across the Asian bourses. Nikkei down about 1%, Shanghai about 0.5%, Hang Seng 2, which was shut yesterday, down about 1% as well. And the SGX Nifty, while it's not showing a major downtick, but this may be deceptive. The Asian bourses are so littered with red that we might have a weak start. Keep in mind, we were trading in the green in trade yesterday as well. So it's not that we're coming off a day which was deep in the red, and therefore there might be some respite because of the Asian markets. Let's wait and watch. Likely that we'll start off lower. Let's see how lower in the first half an hour of trade. What are derivatives indicating? Are they indicating any kind of such positions? Darshan Mehta is standing by with a quick check out there. Darshan, I was looking at the volume picture yesterday. FNO volumes were high. Options activity wasn't probably as high as a normal day.
No, it wasn't. But what we're seeing is that, you know, you're looking at the SGX Nifty is down 14 points. So pretty much will reverse the 20-point gain that we had yesterday. So yesterday we saw a little bit of short covering that came into the market. On the Nifty, it was open interest was down 0.7%. The Nifty was higher. On the Bank Nifty, the short covering was a little more stronger. The open interest was down 2.5%. And that was on account of SBI. But what we're seeing is the fact that, you know, there is the support continues to remain, but the call writers are much more aggressive, because yesterday if you see at 10,500 also call writers were active, and at 10,800 also call writers were active, and put writers are seen to shed positions in open interest, giving an indication that, you know, the market does not have that kind of confidence to go higher. Even if you look at the total open interest, and you can get an indication, yesterday when we spoke, the highest total open interest was at the 11,000 level. After yesterday's buying, it shifted to the 10,800. So the bears at this point of time are active from levels of 10,600 to 10,800. They believe that the market won't go at this level, while a strong amount of support is there at the 10,500 level. If that breaks, probably there could be more selling that could come into the market. Now the Nifty PCR moved down in trade yesterday. It was and the Nifty Bank PCR moved up, because there is there is more strength that's been seen on the Nifty Bank rather than the Nifty at this point of time. Some of the counters that will be in focus because of the FNO ban. One of the counters that comes that enters the FNO ban is BML. Open interest yesterday, the counter was down almost 1% in trade, and 3 counters exit the FNO ban, and all of them moved up drastically yesterday. So Balrampur Chini, PC Jewelers, and Wokhart come out of the FNO ban. 2 stocks that you should also watch out. One of them will be Strides. Yesterday, a huge amount of short covering was seen Open interest build-up open interest declined to the tune of 18%, so short covering was seen. And Indian Oil was the other one yesterday. Fresh short positions were seen on high open interest build-up of 8% in trade. Oil marketing companies, obviously HPCL will also react to its numbers, not the best of numbers, but nevertheless these are the two counters that we should need to watch out in today's trade.
Okay, we will watch out for all of these. Darshan, thanks for putting that into perspective. Stride Sashun has really been all over the place the last 2 or 3 sessions. And actually, it's come down one way over the last 1 month, 3 months, 6 months, come off from the highs of 1100 all the way to 392. Let's see if there is more pain in store. Yesterday, there was a bit of short covering, so the near-term trade becomes a bit tricky. We'll talk to our F&O experts who will join in a bit later on in the show about that as well. However, let's talk about some of the other companies as well, and our research team should be ready to talk about all of these. So we'll talk about all the key stocks in news. We'll talk about what brokerages have to say, maybe some key bulk deals, and of course preview Tata Motors as well. So a bunch of things to watch out for, and Nikki and Yatin are with us to talk about that. Well, before we talk about the previews, let's talk about the stocks and news and maybe some results that have come out post-market hours which could react today. Nikki, good morning.
Hi, good morning. So 5 stocks that we're tracking this morning back of earnings. Strong set of numbers reported by Bata India, where you're seeing an uptick of 7% top line growth at a number of 632 crore. You're also looking at an operationally strong quarter for this company, growth of 43% on back of lower raw material expenses and other expenses, which has percolated down well in the bottom line performance of the company. Margins too have expanded. Future consumer there, the losses have narrowed for the company, but then operationally it's been a strong quarter for the company. Revenues up by 51%. Net loss narrows to 4 crore as compared to 10 crore in the corresponding quarter. EBITDA, we're seeing a more than 9 times jump there at a number of 17 crore as compared to 2 crore. Clearly, the cost-saving techniques and higher revenue has led to a good operational performance on the company, but then the higher tax credit and depreciation to an extent has weighed on the bottom line of the company, leading to net losses. Minda Industries, on the other hand, also has reported good set of numbers. We're looking at a 53% uptick in the top line performance of the company, which in turn has led to good show both operationally as well as on bottom line front. Stable fixed and variable costs and higher revenue has led to a good operational performance from Minda Industries. Music broadcast, this is one stock again that we need to keep an eye out on. Excellent numbers reported by the company. Revenue is up by as much as 14%. Net profit has seen a 4-fold jump there. EBITDA has shot up by 54% for this counter. There is an EBITDA break-even for phase 3 station, which has led to good show from the company. This was anticipated almost 2.5 years later, which has now happened, in turn leading to a good show coming in from the company. And the last set of number is a weak set of number that we're talking about. It's Tata Motors India, where the revenues have come down by 19%, which in turn has impacted the bottom line performance of the company.
Well, thanks a lot for that, Nikki. So interesting numbers out there. You know, Yatin, before we get to Tata Motors, Minda Corp, yesterday was a big auto component day, right? Bharat Forge came out, Minda Corp came out with numbers. Minda Industries, Minda Corp, and the juggernaut rolls on for that Minda group. Their quarterly performances, or at least as far as I can remember, they've been very, very robust.
Yeah, very, very robust. And if you look at the earnings, they surprised on the positive side. They declared, a bonus issue. And on an overall basis, if you look at the demand in the domestic auto industry, yesterday also when we spoke to Bharat Forge, we spoke about the domestic commercial vehicle business, the domestic auto business, and they were quite bullish on the entire scenario. So, the outlook for FY19 remains as good as FY18. And probably, fourth quarter, the exit quarter is usually stronger. But all of these auto ancillaries have been in general doing well, which are linked more or less to the domestic passenger vehicle segment or the general commercial vehicle segment.
Okay, and we'll hear from the management a bit later on, so looking out for that as well. But what about Tata Motors? We've been talking about it, almost every day for the last 1 month, Yatin. What's to be anticipated?
Clearly, the stock is under pressure, Neeraj. Stock around 300 multi-year lows. But if you look at the consolidated performance for Tata Motors this time, we are expecting a 14% revenue growth. Of course, EBITDA growth will be slightly weaker at 6.5%. But margins, look at that picture, 13% versus a level of 13.9. Of course, the pressure is coming really from the domestic business, wherein the margin is expected anywhere between 6 to 8%. So the domestic business is what we'll be watching out for. Ashok Leyland has been doing well on the domestic side. So let's see how really Tata Motors pans out in terms of the realization per vehicle in the domestic market. More importantly, we'll be watching out for the Jaguar Land Rover performance. So we're expecting revenues for JLR to be close to 7.3 billion British pounds. That will be a growth of nearly 1.4%. Look at the EBITDA growth. Again, we are looking at some strong EBITDA coming in. EBITDA seen at close to 1,060 million pounds, and profit seen at 542 million pounds. Of course, the base was higher last year because of one-offs. So the profit number will be low by 42% year on year, but margins is something important we'll be watching out for JLR. Margins for JLR are expected to be close to 14.5% versus the level of 13.6%. So improvement in margin is what we're looking at for JLR, and if that happens, probably the stock will find some support in trade today.
Well, let's wait and watch. Thanks a lot, Nikki, as well as Yatin, for taking us or bringing us up to speed with all the news makers and stocks that could react in the session today. I'm told Gaurang Shah of Geojit is with us on the show now. Gaurang, good morning and many thanks for joining in. This is Neeraj here. Let me start off, Gaurang, with the news makers and the result boys, which came out post-market hours yesterday. Cipla. And a weak quarter. I was talking to Darshan earlier, the margin disappointment out there, even though there are one-offs, the numbers by and large appear very, very weak. And this is despite Cipla not having a larger US presence. Where would you rate the stock, and what do you think the stock could do today and over the near term?
So morning, Neeraj. Well, as a disclosure, we do maintain a positive coverage, and I think it was a little bit discomforting in terms of what the numbers came out and what the commentary was. We maintain a positive coverage, but let's face it, Neeraj, it's not only Cipla. I think the entire Indian pharma sector has been under the weather and possibly going through their own medical treatment, if you may. One bad news on one company and the entire pharma sector goes into the ICU. So my sense is that if you are possibly looking at the next 6 months, 9 months, 12 months, even 18 months, then I don't think pharma is the sector that you could possibly invest in and expect to make money. My understanding is that it may take at least 2.5, 3 years for any kind of recovery to be visible, and post that recovery to reflect on the numbers and possibility the share price is going up. We have been positive on pharma, but purely from 24, 28 months plus kind of time horizon. And every time the number comes out, unfortunately the time period gets extended because of the negativity.
Good morning, Gaurang, this is Darshan here. Now that the numbers are out of SBI, the management commentary out, everyone sliced and diced the news. What did you make of the number? Because on one hand, issues in terms of the asset quality is there, but on the other side, the counter did move up because of a positive commentary. Which side are you on? Do you believe that the worst is over, or there could be more pain left for SBI?
Morning, Darshan. I think possibly I believe that the worst is behind us. And it was really interesting to see the way the stock prices reacted, not only for State Bank of India, but even for PNB, ICICI Bank, Axis Bank. These were the worst set of numbers that anyone would have possibly seen in his history. And my understanding is that unless and until something worst comes up, the bad days are behind us. Again, a disclosure, we do maintain a positive coverage on State Bank of India with a target of 285, 345. And my understanding is that the IBC NCLT resolution will definitely throw in a lot of positivity. And we had one classic case getting resolved, that is Bhushan Steel and Tata Steel, wherein 34 to 35,000 crores have gone into the kitty. And resolutions sooner than later will throw in a lot more, positivities in terms of write-backs. And it was interesting to see the loan book growth, the number that came out compared to what we saw last time. I would also want to go on record, Darshan, that if we have to possibly see the next all-time high on the Sensex and Nifty index, my understanding is that it is going to be thanks to the Bank Nifty or the Bank X in the next couple of quarters.
Okay, and Gaurang, two numbers which came out recently from the Nifty pack, which have reacted extremely positive, and both trading at record highs: Bajaj Finance and Bajaj Finserv. Do you think that valuations are now, overpriced? These two counters in terms of valuations are overpriced, or will growth continue and they will continue to get such kind of premium valuations?
So I can't comment on Bajaj Finserv, though I like the stock and I've been tracking it for a long time, but unfortunately because of regulation and no coverage, I can't comment on it. But Bajaj Finserv, from 750 levels, I believe, if my memory serves me right, we have been having a coverage. And let's face it, anything bad will come for a discount. Even when you go into a shopping mall, if something is bad, you will get it at a discount. But if something is good, premium, and attracts value, will come at a premium. So my understanding is that yes, the stock has given super phenomenal returns in the last 6, 8, 12 months. Maybe given the fact that it has virtually gone into a new orbit and a blue sky zone, there may be a case of profit booking. But I don't think investors in Bajaj Finance would want to, sell the stock for 20% return, 25% return. My understanding, Darshan, is that there is a lot more to be made on the counter. And this is just a humble beginning for all those NBFCs which have got rural, semi-urban penetration. And along with Bajaj Finance, I think M&M Finance is another counter, if you reflect upon, has given great returns. And our sense is that the loan book growth is going to be driven by demand from semi-urban and rural.
Okay. A small-sized media house, Music Broadcast, the Q4 numbers seem very impressive. Revenues were up 13%, but the EBITDA performance up 54%, and therefore on that base, MBL's net profit went up 3.55 times. Margins were at 35.5% versus 26.1%. Seems to be a really strong quarter. Do you track this, Gaurang?
Unfortunately, not Nilesh.
Just bring up the stock, though, for the benefit of our viewers. Extremely strong set of numbers, and over the last 3 months, it's actually remained flat. 8% down is flattish to marginally negative. So we're not coming off a back, or these numbers are not coming on the back of a really strong rally that we've seen. Actually, over the last 6 months, the stock has done virtually nothing. They put up a very strong show. We'll try and speak to the management a bit later on, but seems to be a promising quarter. Let's wait and watch if they forecast a healthy FY19 as well or no. I was talking to Yatin about Minda Industries, Gaurang, and the whole auto component space in the thick of earnings. Minda came out, Minda Corp, Bharat Forge out yesterday, Motherson Sumi out today. Do you like any of these names? And particularly if you track Minda Industries, any thoughts here?
So again, over here, I think, Neeraj, I don't understand. If somebody is positive on auto, I don't really see any reason why that person has to be underweight auto, ancillary, OMC, even tire manufacturing companies. And we've been, as a brokerage house, Neeraj, we've been extremely positive for the last almost about 3-4 years on the auto, ANSI, OMC pack, and Bharat Forge, Motherson Sumi, Minda, Mahindra, CIE, Automotive, some of the names that I can speak offhand that I recollect that we are positive on. And my sense is that today, when we see the numbers from Motherson Sumi, I think the Vision 2020-2022 that the management spoke about would be something very, very interesting to look forward to. And not only that, you have a very strong new order market, but equally strong replacement market for the tire stroke OEM companies in the auto ancillary pack. So yes, we do remain positive on Minda, Bharat Forge, Motherson Sumi, Mahindra, CIE, Automotives, to name a few, and the entire flock of tire manufacturing companies.
Okay. Gaurang, stay on. So much more to talk about, but it's 8:45, that time of the show, wherein we dwell a bit on technicals and derivatives. Gaurav Bissai is Assistant Vice President at LKP Securities, joins us on the show in a bit. Chandan Taparia would also be joining in. Gaurav, good morning to you. Many thanks for joining in. What have you made of the derivative positions that exist? Yesterday we were talking about how 10,500 because of the options action seemed to be a crucial level. But how are you gauging all of that, and what's your approach to trade today?
Good morning. You put it rightly that 10,500 put option commands the highest OI concentration in the put series Jain. Having said that, it has not been seeing a strong bounce. We have seen that 10,500 is just about being protected. We are not seeing a decisive move about 10,580, 600 that people can talk now. It can again go towards 10,700. So the trade is quite simple. Near 10,520, 530. If it sustains those levels, one can have a stop loss of 10,490. On the upside, targets of 10,620 can be seen. As far as options are concerned, I have a strategy wherein one can buy a 10,500 call option and simultaneously sell a 10,550 call option, one lot of 10,600 call option, and buy one 10,650 call option. The basic idea is simple, that as long as Nifty is going to expire about 10,500, the strategy will make money irrespective of whether the Nifty closes or expires at 10,500 or 10,600 or beyond. The maximum loss that you can get is 10 rupees. That is the total premium paid in the entire strategy. And the maximum gain that you can have is 40 rupees. The risk reward is 1:4. That again is a positive sign. And any between 10,500 and 10,650, if Nifty expires between this range, anywhere between this range, you can still make profit. So this is the beauty of the strategy and relatively risk-free.
Gaurav, if someone wants to, play the index, what's a better bet, the Nifty or the Bank Nifty at this point of time?
It would be Nifty. I generally love trading Bank Nifty, but this time around we are seeing a lot of volatility coming in, and there's not early signs of base formation, short-term base formation in Bank Nifty. It is still sell and rise. 26,000 is a strong resistance area. A lot of writing happening in 26,000 call options, so that would be a little bit risky. On the other hand, Bank Nifty, Nifty index, for the reason that we have seen 10,500 being protected. If you look at the option chain, 10,500 put has added portions. This generally means that people are still writing 10,500. So as long as 10,500 sustain, you can have a decent jump towards 10,620, 640. So that would be a better index to trade. For Bank Nifty, if it trades near 25,500 sort of, then I think that concentration is quite high. So any dip towards 25,550 would be more lucrative. At 25,780, 800, I think there's a scope of a little bit more pressure in Bank Nifty.
Okay, Chandan Taparia, he's Associate Vice President at Motilal Oswal with us on the show as well. Chandan, good morning. How are you approaching trade today? And are you taking any trades on the Nifty and the Nifty Bank in the session today?
Yes, Nifty finally managed to hold and close positive after the decline of last 5 trading session. And now it is hovering near to its 50-day exponential moving average. Looking at the option database, we have maximum OI concentration at 10,500 put. And that is likely to hold the market with the support of 10,440, 10,480 zone. But at the same time, call writing is visible at all the higher strike. Maximum call OI concentration has shifted from 11,000 to 10,800, and fresh call writing is also visible at 10,600 and 700 strike. So that data indicates that some positive to range bound or the consolidative move could be seen in the market. Now, if it manages to hold 10,550 zone, then we are expecting a move towards 10,620, 10,650 max as of now. So as of now, the strategy is only buy on decline till it holds about 10,480 zone. But better to play with the option strategy because that is the beauty of the market. Mr. Bisa already suggested one strategy, and again I am adding one more, that is the call header spread. One can buy 10,550 call, sell one lot of 10,600 and 10,700 call. The total premium for this strategy will be around 6.45. And if this Bank Nifty expires any level in between 10,600 to 700 zone, then profit is likely to be between 43.5 rupees. So better risk reward ratio, if it remains lower, the risk is only 6-7 rupees. If it moves and expires between 10,600 to 700 zone, then profit is around 43.5 rupees. So the entire aim of the strategy is we are expecting the maximum put OI of 10,500 to act as a support, and because of that some spike could be seen in the market. Now talking about the Bank Nifty, again our love also changed from the Bank Nifty to Nifty, because Bank Nifty, the concentration is visible at 26,000, and what I observed in the monthly series that 26,000 calls and put both are written at premium of around 300 to 400 points. So that is why they're expecting 350, 400 points either side momentum from 26,000 in the Bank Nifty level. So as of now, it has to surpass 25,950, then only I'll get some comfortable move for the bounce back towards 26,250 level. So as of now, it seems that Nifty is comparatively more stable than the Bank Nifty index, and one can look at the hold about 10,550 in the Nifty and hold about 25,950 for the Bank Nifty to get some stability in the market.
What about stock specific, Chandan? What are you recommending for today?
But talking about the stocks, there are very few counter which are showing the sign of strength or positive prices being formed, because most of the heavyweights are stuck in a range. Mid-cap stocks are continuously falling down and making lower top, lower bottom formation. So I have selected two stocks. One is at, and both the stocks are at the bottom out process. One is buy on the Glenmark Pharma. The stock is making lower top, lower bottom on weekly chart, but on daily chart it has formed a morning star price pattern similar to morning star. We have seen surge in the open interest and the price activity, and it has given the positive divergence with MACD, RSI and the price. It has exactly taken support at the lower band of this falling wedge. So that's why expecting a rebound of the short covering activity in the counter. So recommending to buy on a small dip with a stop loss of 496 and expecting this stock to move towards 530 kind of level. Second is buy on Shriram Transport Finance. After the decline of last 3 weeks, the stock has managed to respect its support of 1400, 1385 zone and negated its formation of lower highs, lower lows on the daily scale. It has also seen the positive crossover on the RSI and the MACD indicator. We have seen some short covering activity. So expecting some bounce in the counter towards 1500, one can buy with a stop loss of 1415 levels.
Okay, hold on. We'll move on to a special segment now, Bloomberg Edge, where Jayesh Kilani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Jayesh, what stock is on your radar today?
Morning, Darshan. I'm watching out for Siemens. That is because the stock is trading very close to the 52-week low, and the moving average convergence divergence indicator suggests that there could be more weakness going ahead. Let's have a look at how the MACD works and what are the conditions that you have to keep in mind. It's a momentum indicator which shows you the relationship between two exponential moving averages of 12-day and 26-day. So a difference between the two is calculated, and then the signal line is in fact calculated based on the MACD line. So the two lines that get plotted, which is the MACD and the signal line. Now you have to watch out for the turning points. Whenever there is a crossover, it signifies a turning point in the trend, and it also gives you a buy and a sell signal depending on the direction of the crossover. So if we can have a look at that as well. So you buy when the MACD line crosses above the signal line, and you sell when the MACD line crosses below the signal line. And this is exactly what has happened on the chart of Siemens. If we can have a look at that, that's the last 6-month chart of Siemens, and you can see that this was the 52-week low, which is just below the 1011 level, and currently also we are just about 1023 on the stock. So there could be further weakness because the bottom panel, which is the MACD indicator, if you zoom into this, you can see that the blue line has dipped below the white line, and all of this has happened below the zero reference line, which gives it a strong sell signal on Siemens.
Okay, we'll certainly watch out for Siemens in today's trade. Gaurav, firstly, your strategies stock specific wise, and also if you have a view on Siemens.
Well, for the stock trading, I would recommend buying Ajanta Pharma futures. The rationale is simple. We have seen a lot of short positions getting built. It has seen good amount of correction. If I'm not wrong, 24-25% correction in the current series. It's now seeing some sort of base formation around 985, 980 kind of levels. Minor long positions are now seen getting built. So abatement of short positions followed by fresh longs. It's a good derivatives data. One can have a stop loss of 985. Immediate targets of 1040 can be seen. Second would be sell call on Alutech Cement. It's given a breakdown on daily charts. Yesterday, the OI addition has been around 8%, 7-8%. So fresh shorts has been seen getting built in the name along with breakdown. One can play for targets of 3,700 and keep a stop loss of 38.10. As far as Siemens is concerned, yes, I agree that Siemens is looking quite weak. It has been seeing a lot of selling at higher levels, and it's trading just above the support levels. If it trades below levels of 1,010, there's a possibility it can slip towards level of somewhere around 945, 950. So I would be a seller below 1,010, stop loss of 1,030, and targets of 950, 955.
Interesting. So a couple of names to watch out for from both our experts. Siemens quite featuring out there. There has been a bit of a, how do I say it, a tallying of sorts between the calls that the Bloomberg terminal is giving and Gaurav Bisa is giving these days. So fairly interesting out there. Let me shift the focus back to a couple of stocks which made the news because of the results. So we've spoken about what's happened to Minda, MBL and others. Bata India, I thought, came out with a decent set of numbers as well. Gaurang, Shah, is Bata fallen within your coverage universe, and what did you make of the quarter?
It does definitely, Neeraj, and my understanding is that all those unfair playing fields in terms of unorganized sector dumping from countries like China, Bangladesh is now a thing of the past for a very long time. And more importantly, when you traditionally used to walk into a Bata store, you used to come across typically that mom and pop kind of products, but with changing times and innovation, with the kind of products that they have to offer in all the segments, Neeraj, whether it is entry level, mid or high end, it's quite interesting to see and buy those products. The same store sales growth rate was single digit, which was a little bit of disheartening, if you will. But I'm quite optimistic in terms of the, again, this is one of the themes, Neeraj, which has a lot to do with the demand from Tier 2, Tier 3 cities, semi and rural India. And the way the stock has spanned over the last 3 to 6 months, possibly in a range, but over the last maybe about 2 years and more, it has been a value creator. We remain positive, 865 long-term targets.
Gaurang, did you see anything unusual in Dr. Reddy's numbers? Because the numbers, frankly, weren't the best and the counter managed to surge 6%. Anything that you spotted?
Darshan, there is lot to be spotted in the Indian pharma. And the way the numbers are, again, this is one of the classic case wherein numbers not so impressing, but the stock reacts positively. So it kind of baffles me at times. But yes, I think 2850, 3020 are the targets from a 3-year plus time horizon. And I say this 3-year plus time horizon purely because of the news flows surrounding the Indian pharma sector.
Okay. Interesting. Yesterday, a bunch of stocks went up and went up quite strongly. Just wondering, Chandan, Taparia, 3 names, VIP, Balrampur Chini, Strides, Sashan. We've discussed Strides marginally, at the margin really, but any thoughts on any of these 3 names?
Talking about the Balrampur Chini, however, we don't have coverage, but it seems that after a sharp decline in last couple of months, some bottom out process is clearly visible. We have seen the positive price action in last 4 to 5 trading session, and the volume is also continuously rising. So that is giving a sense for further momentum. So technically showing sign of movement of 8 to 10% from current levels. Talking about the Strides Sassoon, we have seen sharp decline in this series, is down by around 39%. But on last trading session, it managed to engulf the price decline of the previous trading session. We have seen significant jump at the time of recovery. So that's why expecting a bounce towards 420, 423 level. So one can play this small bounce back move of Star Sasha.
Gaurav, what did you make of Bharat Forge? The counter managed to correct significantly post the numbers that came out. Is this a temporary blip or do you see more downside that's coming in?
Yesterday it was trading below crucial support levels of 670. So I was hoping that if it closes below 670, then there can be some mayhem sort of that can be seen. It will give a range breakdown with the kind of short portions getting built. I think it can then fall towards levels of 630, 620. Fresh shorts are advised only below 670. If it trades below 670, then you can short. If it holds on to 670 levels, a small bounce back can be seen. It would be sell and rise for time being, but fresh shorts are advised only below 670.
Interesting. Less than a minute left. I want to ask Gaurang about Mahanagar Gas. There is a query from a gentleman on our social media platform about Mahanagar Gas and how it's corrected. Gaurang Shah was bullish on that one, and the query specifically got Gaurang. But I'll ask them in moments from now because we're less than a minute left for the markets to get the pre-open rates to come in. So I'll get a fundamental view in just moments from now. Maybe just a quick 20-second technical view. Chandan, Taparia, IGL or MGL? Any thoughts here?
Yeah, talking about the MGL is continuously making low top, low bottom. IGL also broken the support, but some bounce could be seen. So I'm looking for a move towards 266, 267, but only playing for the bounce back because short-term trend or the medium-term trend is under pressure in both the counter.
Okay, so that's the technical. We will get in a fundamental view in moments from now, but 20 seconds or less than 25 seconds for the pre-open rates to kickstart. Let's first show you what the Asian markets are up to today. And the tick of red out there, the SGX is now trading in the lowest point of the day as well. I don't know if that will be actually the open or is it deceptive and just showing the direction in which the markets will start. But suffice to say, we'll start off in the red. So do watch out and brace yourself for some bit of a correction or a pullback today after that 20-odd point uptick that we saw in trade yesterday. All over the place right now. Let's give these rates a chance to settle. But individual names should be the focus today. Start off with Cipla and just show what that stock is doing in the session today, and then move on to HPCL. Both the numbers out post market hours. Doesn't seem like there is a reaction in lines with what the numbers suggested. Well, give them some time. Tata Motors had a big day in trade yesterday. For now, looking like starting off on a positive note, but let's wait and watch. That too might change. For now, HUL is showing a 3% downtick, which I'm sure will change. So all over the place on the index for sure. I think these rates will stabilize. Maybe just bring up a couple of active names from trade yesterday, Balrampur Chini and Stride Sashun. We'll talk about the newsmakers too, but these were the very active names in trade yesterday, and seems like that momentum might continue. What are you spotting, Darshan?
Yeah, so on the mid-cap front, you're seeing Minda Industries is up 11%. KPIT Tech is up 10%, probably will change. They have their numbers today. Hindustan Construction is up almost 10%. PC Jewelers comes out, it's up almost 7%. Future Consumer is up 5%, so that's what I am spotting currently. Again, a lower circuit on Vakrangi. Reliance Naval is down 6%. Radico Khaitan is down 4%. HPCL starts lower by almost 3%. And Torrent Power is down in today's trade. So that's what's happening. Some of the numbers that came out, let's take a look at some of the strong numbers. Bata, let's take a look at what Bata is doing. Strong set of numbers. Future Consumer, strong set of numbers. Let's see what Future Consumer is doing. It's up 1%. L&T Tech Services, that was another strong set of numbers. So that's up 5%. Remember the big surge that came in post the quarter third number, and now it's the fourth quarter number. Minda we spoke about, and Music Broadcast is another one company which came out with strong set of numbers, which is up another 2%. Weak numbers from Cipla, but the management commentary was decent, so could go either way. Cipla is up 3% in today's trade. Igarshi Motors, that one came out with weak set of numbers, so that one is down in trade. And Sonata Software was a weak set of numbers. Let's see how that one is panning out in trade. Three counters which are out of the F&O ban probably could react: Balrampur Chini, PC Jewelers, and Wockhardt. Let's see how they are panning up. The sugar pack continues its good run. PC Jewelers is up almost 4%, and Wockhardt is the third one, is up all. And BEML is another counter which enters the F&O ban, but it's been in the news for all the wrong reason. It just reacts to the Karnataka election verdict that has just come out. So probably it probably could have more selling pressure. That's what I can see. Neeraj, anything else?
No, I just want to mark the currency and the bond yields once before we go on for the top brokerage calls. The rupee at 68.26, so some more worsening there. In fact, a sharp gash, I would add. 68.26. Yesterday we trying to claw our way back above 68, but 68.26, so sharp gash there. And the 10-year yields at 7.84. That's steady actually, not too much of a dramatic shift there. 7.8 to 7.85 is where they have been trading at. Okay, let's get in Yatin Motau Johnson with the top brokerage calls for this morning. Yatin.
Good morning, Neeraj. And, as you were talking about Cipla, let's talk about Cipla first. We have CLSA, which has cut the target price on Cipla to a level of 650 rupees from the previous level of 750 rupees per share. If you look at the brokerage, they believe that the fourth quarter results are weak despite adjusting for one-off items. So despite adjusting for all of those, detailing the results are off the mark. US growth was impacted by supply issues but will revive in the second quarter of FY19. That is what the management told the analysts on the conference call as well. Of course, CLSA believes that the muted EBITDA margin expansion in FY19 is seen but probably FY20 onwards we could see some pickup. So for FY19, the margin outlook according to brokerages remains weak, and probably that is the reason why the target prices have been cut. And also we have Credit Suisse on Bharat Forge. They have also cut the target price here on Bharat Forge to a level of 750 from the previous target of 780. However, they maintain a neutral stance on the stock. As far as Credit Suisse is concerned, they say that the quarter is decent, but the below estimate performance of the India business has been impacting the overall performance, especially on the non-auto front. The continued strong performance in India commercial vehicle segment and PV, which is the passenger vehicle segment, will continue moving forward, and they expect the strong momentum to continue as far as the export markets are concerned for Bharat Forge.
Okay. Yatin, many thanks for putting that into perspective. Gaurang, before we let you go, just a quick word on a question that's come on our social media platforms for you directly, and that's on Mahanagar Gas. The gentleman is asking that if he bought in earlier, would you still be bullish on Mahanagar Gas? Would you still recommend buying it or averaging the cost if the purchase was done a couple of weeks earlier?
So maybe if the purchase is, at 900 or 1000, wherever, Neeraj, we remain extremely positive on Mahanagar Gas. It is one of the companies which is best suited in terms of the piped natural gas supply or cooking gas supply to households. Have no peer comparison or competition. Recently, the stock wasn't in the news because of some stake sale. The capex plan has been put in cold storage for at least short to medium term. But as we go forward and you have more and more, development, stroke redevelopment happening, more and more houses getting connected to natural pipe gas for cooking purposes, getting away from the traditional cooking cylinders in the household, and of course, availability of gas for vehicle usage in far distance will definitely throw positivity. So I don't think one has to sell off the stock from a long-term point of view. If one has got invested at higher level, sub 800, I think it's a perfect level to add gradually for a longer period of time. We remain positive. So hold on.
Okay, many thanks, Gaurang, for joining us today in opening trade, and thanks for the time. But we have one more guest, Deepak Jasani, Head of Retail Research at HDFC Securities, joins us on the show. Good morning, Deepak. This is Darshan here. In terms of the markets looking rather choppy, what are you telling your investors? Is there more pain in the market, or probably it's the right time to invest?
Good morning. Now, our recent view has been that the markets, the way the markets have fallen over the last 5-7 sessions, we saw markets stabilizing a bit yesterday. So now we feel that for next couple of sessions, the markets could bounce upwards. Then we will have to see as to what is the strength in the markets, internals, the breadth, and such like, and then whether that uptrend is sustainable or that upward bounce is sustainable or not, we'll have to take a call. But as we stand today, it seems that after that 2 or 3 or 5 day uptick, we may see one more down move that may be led by some international event.
Interesting. Deepak, what have you made of the kind of moves that the auto pack has gone through? Tata Motors is in news, of course, today because it will come out with results. But the last few days, the auto pack has come off. Are you telling your retail clients to go out and add or buy into some of the auto large caps at these levels?
See, auto has always been a high beta sector, auto and banks. So whenever we have seen some weakness in the bank nifty some time back, of course the private sector banks are still doing quite okay, but the PSU pack has not done well. Auto is another high beta sector. Now when auto and banks both don't do well, then it means that the nifty or the Sensex is also headed lower. So in that sense, for traders, after a sharp fall in auto stocks, it may be a good idea to ride the up bounce. But for investment, probably they should wait a little more.
I'm tempted to ask you, Deepak, Jasani, about the pick of the week that you guys came out today, this week rather. What was the stock and what was the rationale for the stock?
Yeah, the pick of the week this time around was CMI Limited. Now, basically, it's a cables company. These cables are being used in various industries, including railways, utilities, oil and gas refineries, petrochemical power, telecom, etc. So this is the pick of the week. Now, why do we like the stock? Basically, the company has made an acquisition in February 2016 in Buddy. Bought over a very large company from a foreigner who was exiting the country. Now that facility is being ramped up slowly. That facility has multiple products, new clients. So all those synergies and higher utilization could lead to better times going ahead. Even now, the company has been doing reasonably well. The margins are good, the return ratios are good, and it could do even better going forward. So that has been that was the rationale behind recommending it. So we had a buy at the then CMP of 293 and add-on dips to 260 to 265, and the targets of 331 and 361, which is 11 times FY20 and 12 times FY20 in 3 to 4 quarters.
Okay, we'll watch out for CMI in trade today, but we're just minutes away from the market opening and we'll tell you all that you need to know to stay ahead in today's trade. The street will be watching out for numbers from Grasim, Tata Motors, Jet Airways, KPIT Tech, Motherson Sumi as they will report their numbers today.
And in the companies that reported the numbers yesterday, Bata India, Future Consumer, L&T Technologies, Minda Industries and Music Broadcast come out with a good set of quarters.
Whereas Cipla, Igarshi Motors, Sonata Software post weak set of numbers for the March quarters.
HPCL, Healthcare Global and TV Today are amongst the companies that had a mixed fourth quarter.
In bulk deals, BNP Paribas and Brookdale Mauritius buy in 14 lakh shares together in stride. Shasun, the stock starts 1% higher.
And fuel prices continue to rise as oil marketing companies hike prices for the 10th straight day. IOC likely to start off flattish in the session today.
And three counters exit the F&O ban. Balrampur Chini, PC Jewelers, Wokhart, all of them exit and start positive, while BEML enters the F&O ban. Let's see what it's doing. It's also up 0.5%.
Well, those are the set of names to watch out for. As we look at the pre-open rates and as they have settled, HPCL likely to start off on a negative note, about 2.5% lower. So that's the top loser. Vedanta, well, arguably all those news flow around Tuticorin is really having its impact, and maybe rightly so as well, 2.5% down for that one. Cipla reacting a bit to its numbers as well, down about 1.7%. Fundamentally, Deepak, Jasani, HPCL, Cipla, maybe some of the other OMCs, what are your thoughts here?
OMCs, as operationally or business wise, we don't see any problem there. The problem near term, as is well known, is that they have not been able to raise prices in line with the increase in the crude prices so far. So now they are sort of doing it regularly every day, 30-40 paisa, so that it doesn't impact. There is no big bang news impact of that. Now going forward, whether the crude prices will remain at the current levels or they will rise more, that is not known. So in case they continue to rise, then whether they will be able to keep raising prices or whether the government will ask ONGC to freeze the realizations, those are the uncertainties at this point of time. Otherwise, the refining margins, the volume growth, etc., is quite in line. They also give quite decent dividend yields. So pure refining companies also are doing quite well. The OMCs operationally are doing well, but they will keep having this inventory loss impact, as well as in case they are not able to recoup the increase in the crude prices. So that is the worry which is halting any price rediscovery or revaluation in those stocks.
Okay, Deepak, we leave it at that. Thank you so much for joining us on Bloomberg Quint. Just minutes to go before trade starts. Gaurav, very quickly, anything, your top pick for morning trade?
It would be Ajanta Pharma. As I mentioned, the kind of setup it is seeing, if the current levels are sustained, 4 to 5% up move in a day or two cannot be ruled out. So that would be the top pick. Apart from that, PTC India is another one that I would like to highlight in a minute. If it sustains 80 with the kind of put trading we have seen, it can head towards level of 84, 85. Stop loss of 1 rupee, 1.5 rupee, target of 4 to 5 rupees can be seen.
Just 25 seconds, very quickly, your topic.
We already discussed about the Glenmark. I'll continue to be with the same. And apart from that, one can look at the Bajaj Finance and Pidilite.
Okay, Neeraj, opening, what do we have now?
Well, 12 seconds to go. Chandan and Gaurav, stay on. We'll just take in an opening thought from you post-market open and then let you go. But 6 seconds to go for the markets to kickstart trade. We'll start off about a third of a percent or thereabouts lower maybe. No, actually, we start off flattish. The Nifty Bank about 1/4% lower. But otherwise, it's a flattish start. Well, surprise, surprise, we're not reacting in line with what the rest of the Asian markets are doing. Bring up the mid caps and the small caps into the Nifty Bank, marginally in the green as well. Mid caps and the small caps too, absolutely flat. So the start is exactly how it started yesterday. We had a very flat start in trade yesterday as well. Bring up the heat map and see. Maybe even Stevens, maybe marginal gains, no, actually marginal losses. The Reds have some bit of gains out here. Vedanta in the eye of the storm, down about 5%. This one clearly the biggest loser. Dr. Reddy's yesterday a bit of a bump up in the second half of trade, now coming off a little bit. OMC's decline, BPHP, RC, all three of them come off in the session today. And on the gaining side, we have SBI continuing its juggernaut. Yesterday went up 5%, came off a little bit, but currently now about 3% higher. Cipla, interestingly, Darshan will have more thoughts here, but 2.5% higher for Cipla. And Tata Motors was up 3% yesterday, continuing to rise, but clearly the big mover of the morning has to be Vedanta, which is down about 4%. Very quickly, 2 or 3 names that I want to highlight from the mid-cap end of the market because before I hand it over to Darshan. Firstly, stocks which trading in or around new highs. All of these clocked in new highs in trade yesterday and are starting off marginally higher. Do watch out for Berger Paints individually as well. What about stocks which gained quite a bit in trade yesterday, or companies which have come out with good numbers? So both these stocks saw a big surge in Tuesday's session, and Strides Sashun continues to rise, so another 2% higher. This one has had a big fall, just a bit of an uptick from those. And these are the companies that came out with some very strong set of numbers. But Music Broadcast and Minda Industries, both of them reacting very well. Bata, a bit of a subdued start, but still about 1% higher. Darshan, what are you spotting and what explains Cipla?
I think it was down in trade in the pre-open session, but has managed to move up. I think it's the same story, that the numbers are weak. The management gives a strong commentary. That's what I can say on Cipla. A couple of other stocks. 8K Miles was up 20% yesterday, continues its good run. It's up another 5%. But look at the move on State Bank of India. It's up another 5% in trade today. So clearly State Bank of India, and this we should bring up the Nifty Bank, and you can clearly see that there will be traction on the Nifty Bank post this. So the Nifty Bank, when the Nifty is in the red, the Nifty Bank has managed to move into the green. It's pure, you know, SBI has a significant amount of weightage on the Nifty Bank, and that is something that is helping. Cipla has moved it's moved up 5% now. So it's really amazing how Cipla has managed to turn around. But some of the other counters that you need to watch out are the mid caps like Bhushan Steel, which is up in trade. It's been doing well for the past few days. There is L&T Tech, which has reacted positively to the numbers. It's up 6% in today's trade. And PC Jewelers, coming out of the F&O ban, is reacting positively. TV Today reacting negatively to the numbers. Sonata negative, and Symphony, after the big fall yesterday, another 3% downside. I think the weakness is clearly in the place for Symphony.
Continuing 1423 and counting. Well, so it's turned out to be a slightly subdued start for our markets. Flattish, you would have to say, but a bunch of names falling off. Before we get in, a very special guest, one final thought from both our derivative and technical experts who are still with us. It's a flat start, Chandan, Taparia. What would your approach to trade be, either the Nifty or the Nifty Bank? And if there is a stock that pops up on your screen?
Yeah, expecting this flattish kind of movement in the market for next couple of trading session. But yes, 10,480, 500 zone could act as an immediate support. Stock specific, I added one more name, that is Pidilite. The stock has given a breakout and trading at lifetime high territory. So here expecting the fresh momentum in the rally towards 1150, 1160 kind of zone. And already discussed about the selective pharma counter, including Glenmark, where one can see buying interest.
Interesting. Gaurav Bisa, your opening comments and if any stock pops up on your screen.
As I mentioned, 10,500 is a crucial level. As long as we are trading above this level, nothing to worry about. As far as fresh recommendation is concerned, Reliance Infra is looking interesting. Buy above 405, stop loss of 399, targets of 420 can be seen.
Okay, Gaurav as well as Chandan. Gentlemen, many thanks for joining in today and giving us your thoughts this early in the morning. The markets are flat. 10,528 or 10,500 is holding out for now. Let's see what's in store going ahead. But getting a very special guest, Nilesh Shah, Managing Director at Kotak Mahindra Asset Management Company, joins us right now on the show. Nilesh, good morning. Thanks so much for joining in. Late nights and Bloomberg Quint has given you an early morning as well, but thanks for joining in today. What's your thought process, Nilesh, as to what's happening in the markets currently, the macros? And I know you must have gotten this question a number of times at multiple platforms. The macros seem to be turning adverse at a fairly fast clip with what's happening to the rupee, with what's happening to the bond yields as well, and they're not showing any imminent signs of any kind of a pullback. What's the larger impact of this?
So the real thing which we need to worry about is the oil price hike. As oil prices have moved up, it has multiple impact on Indian economy. It can increase current account, it will increase current account deficit for sure. It can increase fiscal deficit if burden is not passed on to the consumers. It can impact inflation if burden is passed on to consumers. It impacts economic growth because higher oil prices does extract a cost from the economy. And more importantly, it affects rupee, it affects local interest rates, and it affects FII confidence in the country. So it is oil whose price rise is amplified in the economy. And clearly there are challenges which we have to manage. It's not that we can't manage oil price hike, but the burden needs to be distributed between the state government, between the central government and oil marketing companies and upstream oil companies and consumers. So these are the three components: the government, central and state, oil marketing and upstream oil companies, and the consumers. Three of them have to share this burden, and if we do a fair, equitable distribution of burden, then I think we can manage it.
You think Delhi is listening into this, Nilesh? And the question mark and part two of that question is, subject to that decision being made as and when it does get made, what implication does this have from an equity market watcher's perspective? Because it's not just oil, right? I mean, one, of course, oil and the larger impact on the Indian economy, but what's happening on the global front started sometime October, November, December, this whole taper tantrum and the impact that it may have. A 10-year long process being unwound surely has implications for equity investors as well. How do markets behave in light of all of this for the rest of 2018?
So undoubtedly global factors will have a shadow on our market. However, will this shadow be like 2008 when actually Lehman Brothers and AIGs and Bear Stearns were going off and we thought they are Indian institutions and created a fall in our market which was bigger than the American market? I don't think so that kind of scenario will happen in India. One, because all those scaremongers who lost money in 2008 by selling have learned from their experience that there's no point in becoming Begani Shadi Mein Abdullah Dewana. Second, as I mentioned, global factors will cast its shadow, but it is the local factors which will have far more importance. The oil price hike will have far more impact on Indian economy than US interest rates moving up. This is not to say that US interest rates moving up or tariff war won't have impact on India. They will impact Indian economy, but for us, oil is a far bigger problem which we need to manage. And as we move towards the later part of the year, people will start discounting 2019 election. So oil in elections will have far bigger impact on Indian market than US interest rates going up or tariff war being played out between US, China and other major players.
Good morning, Nilesh. Hi, this is Darshan here. Most of the Nifty 50 company numbers have already come out, and some of the large and mid caps have also come out. Are you satisfied with the numbers that have come out so far?
Undoubtedly, there are many cases where the results are above expectation or meets expectations. There are few cases where results are below expectations. But by and large, December 17 quarter was first quarter where we could see momentum building up in economy. And at that point of time, one was little bit in dilemma that is it because of the base effect of demonetization? But certainly March 18 quarter now gives the confidence that economic momentum is building up. And we also need to evaluate the constraints within which this economic momentum is coming. Today, we have high real interest rates. There are very few countries where nominal interest rates are as high as India's real interest rates. So that burden is borne by India Inc. and that depresses their profitability. Second, we had overvalued currency which has got corrected in April and May, but that allowed Chinese companies to dump goods in India. We are one of the few countries in the world whose trade deficit with China as a percentage of GDP is so elevated, and clearly that put India Inc. under huge competitive pressure. So overvalued currency and high real interest rates impacted India Inc.'s profitability, and a couple of other factors were also responsible. But these two constraints of rupee and rates did create a drag on India Inc.'s profitability, and now both things are normalizing. Inflation is moving up and that's closing the gap on real interest rate side. Currency finally is finding its own fair value, and this will create momentum for India Inc., which was missing, let's say, before March 18 quarter. More importantly, economy is also gathering pace. If you look at the GST collections, Feb was 89,000 crore, March was 1,03,000 crore. And with e-way introduction bill, there are expectations that April, May, June will start having 1 lakh crore plus numbers. So by and large, result seasons have been in line or ahead of expectations, and this momentum should continue. That's what market is factoring in today.
Nilesh, a word on how the banks have performed. Now, since most of the banks have come out with numbers, the commentary is pretty much unanimous, that the worst is over. But somehow this same commentary has been going on for so many quarters now, and somehow it just doesn't get better. What's your view on this? Is there actually something that's happening that will make this better, or this is just going to get worse now?
So if we divide the financial sector in, let's say, different buckets, there is one bucket of NBFCs and retail focused private sector banks. They are available at higher valuations, but for them the growth path is very clear. They have abundant capital available. They can go and raise capital in the market, and today they are getting a huge opportunity for growth because other components of financial services industry are not having abundance of capital to go on lending. So lack of competition is giving them huge opportunity to grow, and which is why they are available at higher valuation. Then comes into play corporate focused private banks and those PSU banks who are getting capital support from the government, who are not under PCA. We believe this sector is at an interesting junction. We believe there are certain NPAs, especially related to power sectors, which yet have to come out. But over next couple of quarters, that should come out, and that should create a bottoming out of NPAs. Accretion to NPAs are not happening now. It's the past NPAs which are getting discovered or which are getting cleared. The NCLT process is also harbinger of recovery process going ahead. So this sector, the corporate focused private banks and PSU banks who are not under PCA, They may provide for some more NPAs in the power sector, but overall this year they should bottom out in terms of NPA, and then they will provide good opportunity to invest. The third bucket is PCA, the PSU banks which are under PCA. Certainly there it's a challenge to invest, because if they are not going to grow, then what return they will make for shareholders becomes a question mark. So you will have to evaluate financial services in relation to companies which have abundance of capital and growth opportunities, vis-a-vis companies which are trying to come out from the pit in which they were in. And the third segment where lack of capital is going to restrict their growth significantly.
Interesting. Nilesh, I'll just add a fourth element there. And you know, this whole NBFC bucket and the lending super cycle that we seem to be on, do you believe that? I mean, people cite comparisons with emerging markets like Korea, wherein the debt to household GDP is way higher than India, and therefore Indian households and borrowers have the capacity to add more debt, and probably they will. Would you believe that the pocket that is vacated by PSU banks and being gorged upon by the NBFCs would continue even if interest rates were to go up? Because they certainly seem like they'll go up in the near future.
If we see today, your state development loan is going at 8.25%, and a top-rated housing loan borrower in retail community will get it at 8.35%. The spread of 10 basis points between a housing loan to a retail borrower and to the state government is probably the lowest ever in our history. And my guess is that it is lower even than some of the countries like Japan, European Union, where the government securities interest rates is in, very, very low level. So if we go by the historical precedents, and if we go by how other people price their housing loan, either the state development loan is mispriced at 8.25% or housing loan is mispriced at 8.35%. One of them has to go, and I don't know which one is wrongly priced. The second thing which comes into the super cycle of borrowing, I mean, of course, it's a long-term trend. Our parents' generation were buying houses or automobiles on retirement from their PF money. Our generation started borrowing probably in the mid-40s and mid-50s, leveraging our other resources. But our daughter's generation, our kids' generation will be probably buying houses moment they get a job, just like the American kids or European kids are doing. So aversion to borrowing is going away. That is resulting into preponement of consumption. Someone who is going to buy a house in 2050 is probably buying a house in 2020. And that's creating demand for the economy. This I can call India's Ginnie Mae, Freddie Mae movement. This is how American baby boomers generation got houses. And this is how America created growth. So this is a super cycle, no doubt about it. But it doesn't mean that you have to enter the super cycle at every level. There will be valuation constraints at some point of time. There will be risk management constraints at some point of time. And we have seen in the early 90s how many NBFCs were there in leasing business and lending business, and how many of them have survived. So this is undoubtedly a super cycle of lending to retail consumers. But at the same time, you have to be prudent. You have to be backing right horses to win the match.
Well, pearls of wisdom from a man of experience. Nilesh Shah, so good having you. Thank you so much for taking the time out and being with us today and giving us your thoughts. The important things that you mentioned. Thanks for that.
Thank you.
Well, that's the view from Nilesh Shah of Kotak AMC. Macro headwinds and what could happen to arguably the largest pack, which is banking and financial services. We take a break on that note. On the other side of the break, we decode the Q4 earnings with Rajesh Mokashi of Care Ratings, and then Sudhir Jain of Minda Industries joins in to talk about their quarter.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution hai. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Hi guys, we're completing 1 year of the mutual fund show on Bloomberg Quint. Take a look at all that we've done over the last 12 months.
Optically, nothing is cheap. Volatility is integral part of financial markets.
Prices change every microsecond and NAVs change every day.
I have been always suggesting that if you can be Kumbh Karna, invest today and go to sleep for next 14 years.
Join us on the next leg of our journey as we attempt to make the conversations even more meaningful on your favorite show, The Mutual Fund Show.
The Mutual Fund Show Anniversary Special, Wednesday 4 p.m. only on Bloomberg Quint.
Welcome back to Indian Open right here on Bloomberg Quint. The equity markets lying flat, the Nifty Bank doing reasonably okay. Rating agencies are, well, are they raking in the moolah? That's the question, because varied products like shorter tenure bonds mean more work for companies like Care Ratings, which have posted a strong set of numbers in Q4. Had it not been for a higher tax expense, the bottom line numbers also would have looked fairly impressive. The question mark only is whether the trend will hold in the current financial year. Let's pose that question to Rajesh Mokashi. He's Managing Director and Chief Executive Officer at Care Ratings. Good having you, Mr. Mokashi. Thanks so much for joining in. How is the current macro situation, or what does the current macro situation mean for a company like yours? One would presume that higher bond issuances, more rating opportunities would all mean higher business. Has it indeed been the case?
I think if you look at last year's numbers, I think Care has done exceptionally well, in terms of its growth, and that is all driven by the underlying growth in bond markets and credit offtake on the banking side. We managed to hold on to our share, and it is quite evident that there is out of a substantial, whatever 10% increase in let's say overall credit, a substantial chunk of this is taking place in the bond piece. And that means there is a structural shift taking place to the bond market, and Care has done well to hold on to its position in that. But going forward, I see a substantial shift further taking place in the bond market, thanks to some of the policy initiatives of the Government of India seeking investments in even A-rated paper, and even now we see a large bond issuance being offered. Substantial bond issuances are coming in the market, and that augurs well for the rating industry as such. But of course, the macro fundamentals in terms of the fiscal, the external shocks, all these issues remain, and how they pan out, particularly oil price, all these things, how they pan out will have an impact on the fundamentals on the economy. And I think Care will reflect those economic fundamentals eventually.
Yeah, I would presume the rule of thumb would be what? 2 times the GDP growth would be the kind of growth in business for a rating agency, Mr. Mokashi? Or is it slightly different?
I think it's difficult. There have been assumptions on empirical data which is roughly saying 2, but there have been, like for example, this year the bank credit offtake has been around 10% vis-a-vis the growth of around 6-7%. So it's not always the same thumb rule which works. It is a mix of business. The substantial shift to the bond markets also has helped the rating agencies sort of like us grow this year. So I think it's a bit of a transformation of the Indian credit markets, and eventually, of course, it augurs well for the rating agencies as such.
Would you care to elaborate the first answer that you mentioned? You mentioned that the spate of bond issuances that are lined up would probably be the tailwind, but what oil is doing and the headwinds that it poses on the GDP could become a small headwind as well. What's looking like imminent for the next couple of quarters? I know it's difficult to preempt what will happen for the year at large, but that this quarter and the next quarter, what is looking more imminent?
No, I think we have to go by the broader spirit of transformation that is taking place rather than go by first quarter and second quarter, because generally for the first quarter is generally slow for the rating agencies because rating reviews are a function of the audited financial statements. They start coming in towards the end of the first quarter. Unless there are new issuances taking place in the first quarter, like we have a large bond issuances taking place at this point of time. So how those pan out, because there is always a tendency for housing finance companies and so many other issuers to try and catch the early part of the yield curve as there is there are expectations of the interest rates going up. So they may want to catch up those the early lower yield issuances early enough. So that could be a timing issue. But fundamentally, you have to go by the spirit of the economy and how things shape up going forward.
So this 62% increase in the volume of the fresh debt rated in Q4, I would presume that would be difficult to reenact in the quarters ahead?
I would say that you should go by the mix of this composition because, a substantial part has come from the short-term CP issuances, which was a structural phenomena when RBI said you need 2 ratings for commercial paper issuances. But if you see the bond market and the credit market's growth, they're roughly 7, 8, 9 kind of percentage growth. So this is where the real revenues come for the rating agencies. So they are more or less in line with the way our revenues are grown as such. The short-term end is always a continuing end, but not that jump will take place going forward.
So you don't foresee a problem to these numbers? The fresh debt issuances could well continue. It may not be 61%, but it could still be a high number.
I think if we say that the Indian economy is going to grow by around 7.5%, that is the expectations most people have. I think then we need to kind of grow at least 7 or 8% because overall credit offtake even last year has been around 10%. Yes, industrial sector has been somewhat slow, but otherwise the growth has to be in the region of 7, 8, 9, 10% at least.
So, okay, and so what does all of this imply for revenue growth in FY19? And just before you give me that answer, just a sub-segment, and I don't know how does it impact you, but I just wanted a sense. We've been hearing a lot of noise around the SME sector, a bunch of those companies getting listed on the SME bourses, so on and so forth. The number of companies coming up for listing as well, and maybe wanting to get their papers rated should be going up. How has that segment panned out for the rating industry in large and for you as a company, say over the last 6 months?
See, what I would say is that, earlier there was something called as a NSIC scheme for rating SMEs, where there was a Government of India subsidy which was there. That subsidy got withdrawn the year before last towards the end. And last year, the full financial year 18 was practically without any of those subsidized, entities being rated. So we called SMEs as smaller Basel II ratings, smaller size, smaller ticket Basel II ratings. And there we have grown in some kind of, roughly 10% of our business could come from SME ratings, which has actually grown marginally last year. So our focus remains on the SMEs as well as the large corporate ratings. But I also tend to agree that the SME is going to be the key element of some of the future initiatives that will take place, and SMEs will remain a core an important activity for CARE as such, because the growth really will take up going forward on that segment.
So if all of this is going to turn out the way you are saying it could, what's the kind of revenue growth that you envisage for you as a company in FY19?
See, we generally do not make any forward-looking statements on revenues. However, we have to go by the underlying fundamentals of credit offtake. And, there are macro challenges the economy is facing. There are, credit offtake issues and things like that. But if the macro challenges can be sort of sustained and yet the growth can be achieved, then if an underlying credit of around 10% growth still augurs well for the rating agencies. So I think our growth is really linked to the kind of underlying credit growth. And even during a difficult year last year, the bond markets grew substantially higher, whereas the bank loan market grew by around 7 or 8%. So which I believe could be sustained, provided the macros can sustain the credit or demand, and investment cycle to some extent picks up going forward.
Okay, my last question though. So one is the kind of business volume that will come in. Second would be what pricing could be, and is pricing under pressure, and whether yes or no, will it continue to be that way into the next couple of quarters at least, if not longer?
See, I think when you have 7 odd rating agencies in the business, obviously pricing always is a challenge. It's not something that it was never a challenge as such. But if the underlying credit growth takes place, the volume growth takes place, I think that has not affected the bigger rating companies as such. So I think it is difficult to say a yes or no answer in this, saying that, whether the challenge, how we face it is very important going forward. I think so far so good. We have kept up our challenge, and we hope that we will sustain the kind of underlyings that we have, fundamentals that we have built over the years.
Okay. Now, Mr. Mokashi, wish you all the best for the whole year ahead, and thanks so much for taking the time out and speaking to us at Bloomberg Quint.
Thank you. Thank you.
That's K rating a strong quarter. The stock, it's not typically a stock which has got very robust volumes, but about 1.5% higher. The Minda Industries is the other stock that we should pull up on the screen first, and let's just show you what that stock is doing, because the numbers were robust. The stock is up about 5% in the session, and the management Johnson to talk about what's been, to my mind, an exceptional quarter. Revenues up 53%, EBITDA margins improved from 11.7% to 12.4%, net profit up 122%, and the management has approved a bonus issue 2:1 as well, a final dividend too. So let's talk about all of that with Mr. Sudhir Jain. He's Group CFO at Minda Industries, joins us right now on the show. Mr. Jain, thank you so much for taking the time out. Quarter 3 was strong, quarter 4 has been strong, the year at large seems to be okay. The good showing continues. How is business momentum looking like into FY19, and what stood out for the company in quarter 4 FY18?
First, 18-19, we are equally optimistic about 18-19 also. As everybody is aware, the GDP growth is 7% plus. With 7% plus GDP growth, we estimate that the sector will grow at the rate of about 11-12%. And this should give us a growth of about 20% plus in the top line and a similar growth in the bottom line. So we are very optimistic about medium term. As far as the current period is concerned, this year is concerned, yes, the sector has done well. As I have already shared that in our sector, auto sector, there are various segments. We call 2-3 wheeler segment, 4-wheeler including passenger cars, as well as off-road segments. And we cater to all the segments. We supply our components and systems to all the segments. Similarly, geographical wise also, we are in India also, and we have got presence international also. We have got our manufacturing plants outside India, in Spain, in Indonesia, in Vietnam, which cater to our global supplies. And third part, of course, is that we are into OEMs, which is original equipment manufacturers, as well as in the aftermarket. So this diversity in our products, in our geographically in various segments gives us that we are able to harness the growth which is taking place in our sector.
Could you tell us how Q4 was for your different segments? Alloy wheels anyways have been doing well. How did they do? What about the, whether Q4 saw the first signs of the increased penetration in reverse parking systems? Can you break it down for us, Mr. Jain?
Okay, in this particular sector, actually all the products have done very well. internally as we review and we divide our products, some are the traditional products with which we started about 30-35 years ago. Switches, horns, lamps have done well. Similarly, the new components which we added in last 4 to 5 years, like you mentioned, alloy wheels, aluminum die casting components, filters, infotainment systems, all these have also grown and done well. Actually, the last 4 to 5 years, whatever investments which we made in our new products as well as expansion of the existing products, all these utilization has matured. As a result, we are able to harness the benefit of operating leverage as well as financial leverage.
Okay. So
specifically coming to alloy wheels, as you mentioned, penetration. Yeah, please.
No, please carry on. Please finish your point.
Yeah, as far as alloy wheels are concerned, you refer to penetration of alloy wheels in the vehicles are increasing, and we started our manufacturing plant in south in Chennai. Then we expanded our capacity in north in Bawal. Bawal plant also 2 times expansion has already taken place. Only last week we started operations in our Gujarat plant. So we are continuously adding capacity in the alloy wheels, and in alloy wheels penetration is increasing, and we are also able to avail this opportunity as far as the increased demand of alloy wheels in OEM.
Okay, so has all of this led to a higher capacity utilization, Mr. Jain? What's the blended capacity utilization, or you can break it down for us at the end of Q4, and how much scale up do you expect to achieve there in FY19?
Blended capacity utilization is about 80-85%, and this ranges from 70-75% to 95%. Having said that, it's not only the capacity utilization but the productivity improvement in various plants, particularly new plants, which has resulted into not only better capacity utilization but better margins also.
Yeah, in fact, I was going to ask you that. I mean, is it that increased productivity or better productivity and a higher capacity utilization which is leading to this margin expansion, 1, and 2, is this the range at which do you believe your EBITDA margins could be at, or is there scope for further improvement here?
First, immediate our target is that on an annualized basis we cross 12.5% EBITDA margin, and I think that is now within reach considering the Q4 performance. And in next year our target would be to cross 12.5% on a annualized basis, and that is possible, and the whole team of the group is working towards that, and there is a lot of drive towards productivity improvement, and that will lead to 12.5% EBITDA margin hopefully in the coming year.
Would the raw material uptick or the cost uptick be an impediment here, or are you fairly confident that 12.5 annualized is a possibility? And then is there a target of taking it higher, or would you believe that the next couple of years 12.5 is the average level that you would want to operate at?
Firstly, yes, the environment is competitive, and it always was competitive, and we know that prices of essential raw materials etc. will increase. So simultaneously, continuously we have to work on cost management. We have to reduce our cost wherever it is possible through consolidation, through productivity improvement, through better purchasing and volume purchasing, which is a continuous exercise year after year, and it of course will continue in all the coming years. Which is an essential part of our business. As far as 12.5% is concerned, yes, our immediate target of course is 12.5% on an annualized basis, and of course there is a scope for improvement further in years to come, which of course we will set for ourselves as we cross 12.5% on an annualized basis.
You speaking about a 20% top line bottom line growth. I'll tell you what the analyst community believes, and I'm sure you know about this. Everybody believes that the next 3 years out, a 20% CAGR is a minimum that you as a company can show, and there could be an upward bias to those numbers because of the integration of TG Minda, which will happen as well. Are these reasonable assumptions, Mr. Jain?
Yeah, I agree with you, and 20% CAGR is within reach, as you rightly mentioned about the TG Minda also. TG Minda already we are acquiring now 49.9% equity of TG Minda. As necessary resolutions and legal approvals have already been obtained, and this will also substantially add to our top line as well as the bottom line. As you are aware, TG Minda is into airbags and weather strips, and airbags have become compulsory as per the latest regulations, and this is also a very big opportunity for us. And not only TG Minda airbags, which of course is a big opportunity, just to remind, we recently added a few more products to our product range, which is reverse parking systems, speakers to our infotainment business, engineering, manufacturing services. So these three additional vertical will also add to our growth. So when we say the 20%, yes, whatever is the sector rate, as a thumb rule, we say we will grow at least double the rate of the growth of the sector.
And then this integration of TG Minda, if you can share a timeline there, and does that add to the numbers? Because again, the reason I asked this question to you is that while you will grow at that 20% irrespective of TG Minda, people anticipate that that could add a further 2 or 5% to the top line. Is that a reasonable estimate for FY19? Maybe northwards of 20%, around 25%?
I think you are right. As far as the timelines are concerned, as I already mentioned, necessary approvals are in place. We are now in the process of actual equity transfer, which should be done in coming 3 months, and of course they will add to our numbers. But considering the Ind AS, which is the latest accounting standard which we are following and everybody is following, the top line will not be added, but yes, profitability of that company would be added to the bottom line.
Okay. We wish you all the best for that and more. Keep up the good showing, Mr. Jain, and thank you so much for speaking to us at Bloomberg Quint.
Thank you. Thank you very much.
That's Minda Industries. Fabulous showing. The stock is up, was up 5. Okay, sorry, post that's the interaction. 7% higher now for Minda Industries. The management expressing confidence about a 20% CAGR. Sounded conservative on the top line. Believed that the bottom line could actually be enhanced because of this integration of the airbags company TG Minda, that the integration process is on with the parent company as well, and believes the growth looks set for more in the years ahead as well. The index is down about 1/3%. Select stocks seem to be doing okay. I just want to take one last check on a couple of counters. One of them is Vedanta, and let's just see what's happening there, because it started off in shambles really. 3.5% lower, though probably not as bad as otherwise feared. Though I must say Tata Steel, amongst others too, has corrected quite a bit. And on the flip side, I think SBI is having a field day in trade, up about 5%. Stride Sashan up about 8%, really good going. And Symphony's corrected another 5%. Again, not surprised there. 1384 now. That's a 17% cut in Symphony in the last 2 trading sessions alone. Not without reason. Wrap it up on this leg of Indian Open. From the team that put this show together, thanks so much for watching. Up next is the FNO Show.